Good afternoon, and welcome to our webinar, the 2017 Supply Chains to Admire. I'm your host, Helen King. The results are in. In this webinar, we will talk about the methodology used to rank the 2017 Supply Chains to Admire. We will also hear from two-time Supply Chains to Admire winner Cummins, as well as Supply Chains to Admire Dow AgriSciences and their journeys to supply chain excellence. Before I hand this over to Laura and the rest of the panel, there are a few things I want to cover with you. We are recording today's session and we'll post it on our on-demand webinars page. You can visit our website to listen to this or any of our other webinars. Additionally, we'll send out the slides to all attendees within 24 hours of the recording. We encourage you to share these slides with others in your organization, and if you have questions, reach out to Laura or myself to set up a discussion. We want to hear your questions about our findings. Please post to the Q&A function to the left of your screen. We have left time at the end of the webinar to address your questions. Finally, we will be live tweeting the webinar, so if you'd like to join the social media conversation, you can use the hashtag SCIWebinar and the handle @SCInsightsLLC during the event. Now let me introduce your host, Laura Cesari, founder of Supply Chain Insights. As an enterprise strategist, Laura focuses on the changing face of enterprise technologies. Her research is designed for the early adopter seeking first mover advantage. She comes to the stage with over 40 years of diverse supply chain experience. Welcome, Laura.
Hey, thank you so much, Helen, and I'm very, very happy to have two guests today on a panel. Joe Krakoska, who I've known for almost a decade now, and Joe's actually a mentor for me in the development of the methodology, and I thought it would be great to have Joe talk about how Dell has used the methodology. And Erica, who was the recipient last year of the Supply Chains to Admire and has actually won for a second year. So, Joe, why don't you start and tell the group a little bit about yourself?
Sure. Thanks, Laura. Well, first of all, thank you for referring to me as a mentor. For you, that's quite a compliment because I view you as a teacher for me and for us in Dow AgriSciences. As you said, we've been working together for almost a decade. I joined Dow 34 years ago, started in R&D, background is chemical engineering, and I have been in supply chain now for almost a decade. And I have had a lot of, I think, important learning experiences using this idea that Supply Chain Insights started. But, you know, we're a company of active ingredients, much the same way a pharmaceutical company is for people. We do that for crops and crop protection, and that's our business model, and we enjoy it because we think it's a great way to go to work but help humanity at the same time.
Awesome, and we're hoping that you can help us feed the world as we get into 2050, so thank you for joining us, and you're doing some great work. Erica, tell the audience a little bit about yourself and your work at Cummins.
Sure. Thank you, Laura, for the invite today. Well, I am an industrial engineer by training. I came to the U.S. Almost, now in August it will be 12 years. To pursue higher education, and then after a short tenure in academia, I decided to go back to industry and join Cummins back in 2013 in the supply chain strategy group, where I've been since then. And I've been doing mostly a lot of analytics for supply chain, network optimization, statistics, demand planning, and so forth. And I am very happy. I've known Laura, I think I've known you for about a year now. And although I haven't known you as long as Joe has, I think this past year has been very fruitful, a very fruitful relationship. So thank you.
Well, thank you so much, Erica. You know, last year when we did the Supply Chains to Admire winners, I had no idea that Cummins had such great performance and improvement. And like this year where I reach out to all the winners and I send them congratulation notes, that was actually a way that I got to know Cummins and Erica, and it's been great. So let's just jump right in. I'm going to ask the panel to give some thoughts about the Supply Chains to Admire methodology. So first of all, why the Supply Chains to Admire? In 2012, I wrote a book, Bricks Matter, and I had written case studies over many years about companies that I'd worked with when I was at AMR Research. And I had believed that supply chains were making progress on the balance sheet. But when I printed the balance sheets of the companies that I'd worked with, I put them into three piles. One pile was that companies were not making progress on either inventory turns or operating margin or cost. And the second pile was that they were making progress on one or the other metric. And the third pile was that they were not making progress at all. And sadly, I found that 90% of companies were in the pile of either making progress on singular metrics or not making progress at all. So when I founded Supply Chain Insights, I wanted to develop an objective method that could really guide our research to drive what is supply chain excellence. And there is not an industry standard for this, so I wanted to do that. And I had been part of the MR Top 25, which became the Gartner Top 25, and I was embarrassed to be an analyst to ask to rate that because it became so much a popularity contest. You know, people would roll in their PR teams to really try to create brand awareness within the eyes of the analyst, and it was quite embarrassing for me, and it wasn't something I wanted to be associated with. So I wanted a data-driven, objective methodology to be able to drive this. So our first key was to define an objective measurement for supply chain excellence. And then what we wanted to do was to share data to help supply chain leaders objectively benchmark and build balanced portfolios. Each industry is different, and when I work with companies on strategic plans, I often find that their logic for benchmarking is convoluted. They'll set targets that may be a fit for the high-tech industry, and they're a chemical company, but they don't really understand how much effort goes into improving metrics and how the metrics portfolio has got to be managed together. The other thing I wanted to understand was how fast could a company improve balance sheet performance? And I wanted to break the silos between the supply chain team and the finance team and have the supply chain team talk the language of finance and have the finance team understand what was possible in the supply chain world. And then I wanted to build an objective standard that was data-driven. And one of the first clients that I worked with was Joe. And Joe and I started working on a concept called orbit charts. And underneath this methodology are orbit charts. And an orbit chart allows you to take two metrics, because the supply chain is a nonlinear complex system, and plot year-over-year improvement. So on the screen, I'm showing you Dow and also BASF. And BASF was a winner last year in the supply chains to admire, but because of the lack of performance on inventory, they fell off the winner's circle this year. And the way you look at an orbit chart is you start with 2006 and you plot the trend across the years, and you also look at the average values. So in this case, you can see that BASF had an operating margin of 11% and inventory turns of 5.5, and Dow had a lower operating margin of 7% and an inventory turns of 6.27. Now, interestingly, Dow has revenue per employee that's 5 times better than the industry. So you would have thought that the improvement in employee productivity would have translated to better margin. But one of the things that I started working with Joe on was a definition of supply chain excellence for Dow. So Joe, let's talk a little bit about orbit charts and what you learned in this whole evolution with working together.
Yeah, I think, Laura, it's difficult to say what was the most important learning. I think one of the things that we struggled with was metrics overload. And maybe parallel to that was functional excellence, because I use the medical analogy. Think about all of the wonderful advances in our understanding of the human body and the human condition because we have specialized. over the decades. And imagine if every doctor had to be a generalist, you wouldn't understand near as much as we do. But the smarter we get, now we're starting to be able to reconnect all of those different subsystems into kind of a macro sort of a condition. And I feel like that was my first big learning is the idea that if we focus in our sub-functions or functions on those metrics, it's the equivalent of, having the perfect stomach, but if the heart isn't synchronized and orchestrated, well, then the system overall doesn't work. And I think we had a lot of that going on. So that was probably my first, biggest, most important learning. And the second one I'll mention here is the idea on this one simple graphic that takes all of those different possible metrics, some of them more important, less important than others, and tries to put it down into a basic idea of the profitability of the business and the utilization of working capital over time. And I think that, when you can get to that simple, elegant view that summarizes all of those subsystems, I think something special is at hand, and that's helped us a great deal. And it doesn't mean that you don't have, setbacks, if you will, in the orbit chart picture. It just means that you have a much richer understanding, and if done well, you probably knew in advance what the setback or the picture was going to look like. So those would be my initial top-level highlights.
Okay, well, and from the work that we did, we started plotting orbit charts of companies across industries, and we found that some companies had pretty wide swings. So, for example, Dow has a wider pattern than BASF, and that's called resiliency. So our principle is that we believe that supply chain leaders should be driving to the best scenario of improving margin and improving costs, which you can see the red at the top, and that the pattern should be very tight. Now, the other thing we found was that many times we conceptually believed that certain companies were supply chain leaders, like Walmart, but when we looked at a fact-based discussion, we found that a company like TJX is actually driving faster improvement and also outperforming the peer group. So you can see here that Walmart has a 6% margin and 8 turns. TJX has a 9% margin and 5.64 turns. So one of the things that we started to do was we started to look at the relationship between improvement, how fast companies were moving towards the best scenario, and performance, which is how does that company stack rank against an industry peer group. And that analysis takes us about 4 months to do. We wait until March when all of the financial reporting is done for the prior year. We divide companies into industry groups because every industry performs very differently. And we calculate 3 sub-elements to what we call the supply chain index. And the supply chain index is our measurement of improvement. And the first is balance. And balance is the intersection of a vector analysis on an orbit chart between growth and return on invested capital. And then we look at resiliency, which is how big is the pattern on operating margin and inventory turns. And then we look at strength, which is the vector analysis on operating margin and inventory turns. And if you want to see all the details of this analysis, it's available on our website and also in a report. And we will make all of these slides available. So this is our 4th year of analysis. We wanted to have a data-based approach. We did 495 companies and 31 industries, and we had 24 winners. Now, one of the things that we find is that the high-tech industry is doing better against this analysis than process-based industries, and we also find that retail is doing better when there is a new business model. So you'll see that companies like TJX, Family Dollar, and some of the other dollar chains are doing well on the retail side. But what we first do is we calculate improvement. So we calculate 3 factors: strength, balance, and resiliency off the orbit charts to answer the question, are companies making progress on improvement at the balance sheet? Then we look at the cut of how are companies doing on market cap to peer group and price to tangible book to peer group. And then we look at performance. And performance has got an assumption that for a top performer, they need to be performing on a balanced portfolio of growth, operating margin, inventory turns, return on invested capital at a level higher than the peer group. Now, Erica, you were a winner last year. How did the Cummins organization feel about being a winner?
Well, we are very honored. The company is very honored to be once again a winner, and it does generate the confidence in the work we're doing and the supply chain transformation roadmap that we've been that we've been delivering for the last 5 years or so. Most importantly, last year when we were introduced to you and your methodology, and we were looking at our orbit chart, for those of you that attended the summit last year, I mentioned over there that we were going through a very tough 2016. Our markets were not performing as we would like them, and the company was going through a very strong cost reduction initiative, and of course, trying to deliver cost reduction where it made sense to do so. And what Jim, our team leader, and ourselves were kind of hoping is that next year's, the orbit chart that you just published will show that cost reduction, in our margin. And back in March or so, when the team was doing, its assessment for what are the strategies that we're going to put forward for next, for this year, I had the supply chain insights working there, and Jim and I were discussing, will that show or not? And about a month ago or so, when you published the results and we saw our orbit chart, we could see that improvement in our margin. Since we knew revenue and sales were not coming in, we were hoping that at least all of that work will show up, and it did. So although we haven't formally yet used the orbit charts to drive strategies, we are trying to validate the orbit charts with the work that we are currently doing. So I hope this answers your question, Laura.
Yeah, it's great. And so every winner gets a plaque, and they're invited to come and speak at our Global Summit, which will be in September, and I'm currently in the process of sending all of the awards to the winners, and these are the winners. And you can see that there are more discrete winners than there are process winners, and there are more discrete winners than there are retail. And the retail winners have really worked on redefining business models. Now, one of the things that this methodology does, because we use ratios, is we're also able to recognize small companies. So the Boston Beer Company, I think of them as the producer of Sam Adams, small company actually outperformed on this criteria, outperformed against InBev, and L'Oreal is a multiple winner, as is Cummins, and Dollar Tree and Dollar General are multiple year winners, as is Cisco Systems and also Apple. And so one of the things that we're doing is we're tracking the characteristics of these companies in a big data project that we'll be talking about more at the summit, where we're taking 5 years of quantitative data along with 15 years of financial data and mining the characteristics of companies that have done the best on growth, cost, and value to really gain insight into the last decade. So Erica, let's get into the Cummins numbers. So first of all, congratulations. You're won again. And what we do for every industry, this is what's in the Supply Chains to Admire report, and there's also a large summary that gives all of this analysis for all winners that's available on SlideShare. What we do is we divide this by industry, and there is no cutoff on revenue. we need to have a company that's been public for the period of time of 2010 to 2016. And the first thing we do is we look at the supply chain index rank, which is a degree of performance. So Cummins is number 3 on improvement. And then we look at the market cap and price to tangible book to look at value. And then we look at performance on the what we call the effective frontier of how did the company balance growth, operating margin, inventory turns, or return on invested capital. And the reason we picked those metrics was based upon work that we did on correlations to market cap. So, Erica, how do you feel about these numbers?
Well, yeah, they do reflect what the company has been going through for the last year, and even so since, as you mentioned, since 2010. Our markets are very cyclical, and yes, you can see those in our orbit chart. And the first time I saw this last year, we try and map the chart with our cycles and with our new product introduction. So if you see in your orbit chart that big swing from the upper left, which I think it's 2009 to 2010. That's one of our first introductions for EPA compliant and emissions compliant product. So we can see how those new product introductions help us, hopefully drive, these orbit chart in the best scenario direction.
Well, what do you think is the secret sauce at Cummins? If we were going to say, because a lot of people listen on the phone and say, well, how do I become a winner? Why do you think Cummins won?
Well, we want to think these are our four fundamentals for the work, at least in our working supply chain and the way we manage our transformation. First, we are a company that is not afraid to take long-term views and long-term approach to challenges. And other piece is we do focus on those fundamentals. We know we are an engineering company. We strive for supply chain excellence, but we never forget that we are an engineering company, and we drive our supply chain as an engineering company with data-driven decisions. The other piece is the balance. We have several markets in which we run a mode one supply chain. We know our demand is steady. We run that like clockwork. It's very efficient, very lean. And we have some other markets, especially in the power generation business, that can be very agile and very low volumes with very diverse SKUs. So not only that, but also since our markets, as I mentioned before, they're very cyclical, we try and have the balance in products and markets. We diversify our portfolio across the world so that we are able to even thrive, not only survive, but thrive during those hard cycles. And most importantly, I think we rely in our culture. We have a culture of diversity. In the previous, before the seminar, Joe and I were speaking about Columbus, which is a town where our company is headquartered, Columbus, Indiana. It's a very small town, 45,000 people, but it's very diverse. You will never think you are in the middle of the beautiful Midwest, U.S. Midwest. You find the best minds and the best excellence in engineering, in supply chain, and so forth. And one of the tenets of one of our previous CEOs is that we will hire the talent, whatever it is, and we'll bring it to Cummins. So I think those are the things that have made Cummins a successful company. In 2019, we'll celebrate our first centennial, our first 100 years of the company, and I do hope it's the first celebration of many, many others. But I think those are some of the reasons of why we are succeeding and why we have been a two-time winner.
Awesome. Well, thank you so much. Now, Joe, let's go back to the winners. Why do you think no one from the chemical industry won?
Well, I'm going to hopefully answer that question through Erica's answer. I think Erica did a great job of outlining the holistic view of the role of supply chain. And I think when you drive to functional excellence, it can result in a lot of internal perspective, for example, that supply chain takes care of the logistics or the warehousing, or supply chain takes a demand signal and then gives plans to producing nodes. Those are things that supply chain does, but I think what Erica's presentation illustrated is that using the orbit chart sort of philosophy, it kind of promotes supply chain to be able to think business and speak in a business language. And my short answer to why I think the chemical sector is not on this map is we are probably still guilty of too much functionally specific thinking. It drives excellence in what a function views as the most important metrics, but it doesn't allow the machine to come together in a synchronous way and orchestrate everybody in the company towards some common objectives that Erica outlined. So I hope that's not too philosophical of an answer, but I think there's an important opportunity there, and the orbit charts, in my view, help facilitate that journey from a functional way of thinking to a holistic way of thinking.
So, Joe, my observation in the last decade is that the chemical companies, as we became more global, became larger, and the larger the company, the more the focus on functional excellence, the more you throw the supply chain out of balance. And the other thing is the technologies that we were implementing became more functional as we went from the 1990s to 2000, with the segregation of applications by function. And one of the issues is that, leaders really invested in networks and looked at horizontal processes where I think chemical companies were just trying to become global and keep up with all the M&A and the diversion of divestitures, et cetera. Does that seem like the right answer to you or close?
I think you're right on target, Laura. The thing that excites me is that a lot of those chemical companies, they have the scale, they have the wherewithal, they have the bankroll to be able to take full advantage of emerging capabilities. And I think to some degree, those silos that you mentioned, it allowed people to develop really great functional silos in terms of data universes, et cetera. But today's technology in the digital arena is going to allow a connectivity of those silos like there has never been before. And I'm not referring to, single client SAP as a tagline. I'm referring to a genuine connectivity of data universes across functions and even across value chains outside a company. And so I think we're positioned, let me put it a little bit differently. I think the technology has the capability to enable some things that we became a little insular in our functions, and I think the technology will allow us to liberate that data across the value chain. So time will tell whether we take full advantage of that capability.
Yeah, one of the questions we've got, Steve is asking a question about what do I mean about retailers who are more successful by changing business models. With the coming out of the recession, we had more of a dollar-conscious shopper. And if you look at TJX, Dollar Tree, and Dollar General, they were able to adapt for that dollar-conscious shopper, whereas someone like Sears or Macy's or even Target struggled with supply chain design coming out of the recession. And so one of the issues is that, they lost ground. And also with the evolution of e-commerce, they were not able to really drive some of the advancements on omni-channel. So let's take a look at some of the retailers since Steve is asking the question. This is Dollar General, so you can see Dollar General is driving improvements at a fast rate. So this is Dollar Tree, again, they actually drove more advancements at the intersection of growth and return on invested capital than operating margin and inventory turns, and this is TJX. And unless you did this kind of methodology, you wouldn't see these kind of patterns. And the supply chains to admire is all about patterns. It's about, what is the pattern for improvement? Are we driving value faster than the peer group? And are we performing on a balanced portfolio that is higher than the industry average? Because you really can't put all industries in a spreadsheet and shake them up and declare a winner. The methodology that we've worked on for the last 4 years has been refined over time, and I think that we have learned an awful lot about this methodology as to be very careful about the peer groups. You can't use NAICS codes. They don't work. And so what we did was we looked at the peer groups based upon how stocks are grouped, and we divided into 31 industries. Be very careful of the time period. So we're looking at the post-recession period. 3 years is too short. 5 to 6 years is much better because you can't see the patterns in a short period of time. Then to calculate the vector analysis on the orbit charts to look at improvement, then to compare for value to look at market capitalization and price to tangible book. And, the traditional supply chain has been very focused on cost, and so what we're trying to do is drive a discussion on value. And we'll continue to do correlations to, market capitalization and price to tangible book because we're still in our own research minds trying to figure this out. And then the ability to manage the balanced scorecard of growth, operating margin, inventory turns, or return on invested capital. And to drive that balanced scorecard, you've got to be out of your vertical silos and very focused on horizontal processes and be very clear on the definition of supply chain excellence. And one of my key learnings as an analyst is how few companies are really clear on the connection of the balance sheet to the definition of supply chain excellence. And that is not a trivial discussion, and it's one that we hope that the supply chains to admire methodology can really help companies to get clear on. All of the slides will be shared after this webinar, and there's a whole series of slides that you should take a look at on the peer group analysis like I showed for Cummins and the orbit charts. But overall, where we are right now in the research is laggards tend to focus on functional metrics. They tend to focus on singular metric strategies. So like you saw that BASF lost the ability to control inventory. We also see that laggards have changed leadership a lot, and that's one of the things that we're looking at in our big data project where we're looking at this analysis and taking it to a higher level to look at how frequently did leadership change in these companies. They focused more on transactional processes. So as the implementation of transactional systems like ERP have happened, the time frame of focus has become more on order to cash and procure to pay. And we see that companies that really have the ability to translate to the balance sheet are much better on horizontal processes and planning and network design. So one of the things Erica talked about is the importance of that at Cummins. But also the ability to have the right cultural DNA, to have a clear focus like Erica was talking about, avoid fads, and continue that path forward against what the company values and translating it into leadership and culture. So, Joe, how do you feel about this list? Does anything you'd add or anything you would challenge here?
I would not change anything that's on the slide. What I might add is a note that the systems in an organization need to be aligned with the business strategy. And I think this methodology, to me, it forces a reconciliation of these various metrics, and it makes sure that you're selecting metrics that are actually supporting what you're trying to do at a business level. And I think the role of supply chain in that discussion is more and more critical as we go through time. and this idea that you have to be looking at the entire process system horizontally, I think, is an illustration of the continued importance of supply chain in the organization. So to me, I would add something about systems consistent with business strategy. You mentioned the retail sector and Dollar General being up there, and I think maybe at the other extreme in terms of, I don't know, technology deployment or digitization, you might think of some of the e-commerce models, and a lot of the big retailer is in the middle of that. And being in the middle is difficult because you have systems that try and do everything for everyone, and that's a pretty challenging recipe to win at.
Yeah, exactly. Erica, how about you? How do you feel about this list? Anything you would change or add?
No, nothing that I would change regarding that. Probably, just on adding something regarding the capability of knowing where their excellence resides. Not every company can be an expert in transportation. Not every company can be, bring in-house their own logistics or IT, et cetera. And I've seen it in previous, in my previous lives, and even in some, attempts in our own company where we try to bring in-house certain capabilities, and we make huge investments and in talent and time, and we decide to go back and outsource. So it's probably defining what is valuable for the company to hold in-house versus what is not.
Right. Yeah, making conscious choice.
Erica reminds me of an analogy that you often use, Laura, and it's really hard to implement, but that the decathlete analogy that you talk about oftentimes, that if you attempted to be the best at every event or the best at any event, you would sacrifice so much in the others. And it's really hard to get an organization to make a decision that they're not going to be better than number 3 or number 2 at any given metric, because doing so would put the larger system out of balance. So that decathlete example really resonated with me a decade ago, and it still does today.
Well, great. Well, if someone is listening to the webinar or the replay and you'd like your orbit charts, we'd be glad to give them to you and also share where you stack rank. And also, we've got a couple of questions. I have a question about what are the most important horizontal processes. Our hypothesis is that it's the connection of revenue management, which is looking at price and market tactics, to sales and operations planning, to new product launch. However, in our big data project that we're working on with on Hadoop, where we're putting in our 15 years of financial data and our 5 years of quantitative data, we're actually going to test that. And our research that we did last year that was a more focused analysis, we did find a correlation with effective sales and operations planning, and we tested 65 factors. So we're not sure what we'll find in terms of correlation, but we're working on that now, and we'll actually be presenting that data at the Supply Chain Insights Global Summit. We actually had another question that says, what is the impact of up-to-date IT? We're mining the data also to look at that. We did not find a correlation for a single ERP instance last year. We also tested, the type of ERP system, the type of APS system, who implemented the systems. We didn't find the correlation there. What we do find is that when companies are clear on what is supply chain excellence, have effective S&OP process, have better network visibility, particularly to second and third tier suppliers, and have better supplier reliability, that we do see a correlation of price to tangible book. But in this big data analysis that we're going to be presenting at the conference, we'll be able to share more, and we'll actually be writing a report on that in September and presenting a webinar on that later on in the year. So this is a lot of work. I want to thank the Supply Chain Insights research team for all the work. It takes about 4 people 3 months to do this work and to mine the data, and we've had a lot of really heated debates about the methodology and the statistics, and from time to time we reach out to professors, and if you're an academic and you have insights for us about how to make this better, or you're a supply chain professional and you've got questions, we try to make all this open. We share all of our research in front of the firewall. And we're hoping that people will join us at the Supply Chain Insights Conference, which will be in September. It's in Greensboro, Georgia, a little bit east of Atlanta at a beautiful resort, Lake Oconee. And we will have the individuals who won the awards present on their key insights, and we'll be presenting plaques to all the award winners that are at the conference. And we'll be attempting to write case studies on as many of these companies as possible so we can understand the secret sauce and be able to share that with you. So Joe and Erica, any last comments for the audience?
Erica, I'll give you the honor. Go first.
Oh, thank you, Joe. Our company, just as I mentioned before, being an engineering company, we continue to strive for excellence in data-driven decisions. This year, the markets are looking a little bit brighter for us, so we hope that next year orbit chart looks a little bit prettier than it has until now. And we continue working with Laura. I'll be there. Myself and another team member will be there at the summit. So I hope to meet, of course, any one of you who are in the audience listening and might attend. And Laura, thank you again for the invite.
Thank you, Erica. Joe, anything that you'd like to say to wrap up?
Yeah, for me, just the idea that as you go through the collection of metrics, the ratios, the possibilities, the orbit charts, I found myself wondering which of our systems are good enough at their existing level of performance, and which one or two are really the rate limiting factor. And then this debate that you and I continue to have around sometimes you're going to move southwest on that chart because of a specific business decision. Obviously, you cannot continue to move southwest and think that you're moving to better. But that's a debate that I continue to have with myself, and it causes me to dissect business units within big companies to try and understand those pictures and those patterns better. And beyond that, I'm excited about Georgia. Every time I go to one of the conferences, I end up learning a lot from the participants and from the agenda, and I'm very excited to continue that journey.
Well, thank you. We do have a question about training, and we have built online classes with a company by the name of CorpU, which allows cross-company training, which we have a cross-company cohort going on right now with about 40 people that are going through the 7 modules. We can also take this training inside an organization if you want to train on the metrics that matter or the supply chains to admire methodology. And we do a face-to-face boot camp 3 times a year. The next one's in October in Philadelphia. We have 3 spots left for that boot camp if you want to register. The boot camp is designed for business leaders that want to get face-to-face, really get into strategy and what's happening in the world of technology. So Cross-Company Academy, bringing the training inside on an e-learning and the company cohort, and then face-to-face. We're trying to help supply chain leaders to mature their systems and drive supply chain excellence. So we write reports every month. We have our newsletter going out next week with 2 reports. We give all of our reports away because we believe that research should not be behind a paywall. We do these monthly webinars, and we archive them in our community called Beat Fusion. And please follow us on our websites and in our community. And Helen, with that, I'll send it back to you.
Thanks, Laura, and thank you to everyone who joined us today. A few things before we end. As I mentioned, we will send the slides out and a recording link to everyone on this webinar, so keep an eye out for a follow-up email from us. We also encourage you to engage with us on social media by following us on Twitter and Facebook and joining our LinkedIn company page and following us on SlideShare. You can also join our online community for supply chain professionals, beatfusion.com. You can find all of this information in the slide deck. Thank you.
Thanks all, and thanks, Joe and Erica.
Thank you. Bye-bye.
Thank you.